You are listening to the Mining Stock Education Podcast, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I think this bear market in commodities, the valuations of commodities against S&P 500 are at 50 years low. And I think this is a once-in-a-lifetime opportunity to really buy at rock bottom prices, really pennies to the dollar. We're very fortunate because we have some 50 million Canadian assets under management. So if you're 50 million at the bottom of the market, nice things can happen to you and your fund when the bull market returns. And I think we're on the verge of that to happen.
Thank you for tuning in to Mining Stock Education. I'm Bill Powers. Feel free to engage the show by emailing me at bill@MiningStockEducation.com. Well, my guest today, I first listened to, I would say it was about 6 years ago after the publication of his book, The Big Reset, War on Gold and the Financial Endgame. I'm speaking of Willem Middelkoop. Willem is bullish on gold, as his book title indicates, but he's also very bullish on commodities in general, and he believes that we are at the start of a generational bull market in commodities. He focuses on investing primarily in the exploration stage of the mining life cycle as he manages the Commodity Discovery Fund based in the Netherlands. So Willem, welcome to Mining Stock Education, and could you begin by sharing with us why your fund focuses on investing in the discovery phase of the mining life cycle?
Thanks for the invite, but as many investors know, this is the most exciting and often the most profitable phase during a mining cycle when a smaller exploration companies strikes gold or silver or copper or zinc. We often see a very sharp increase in the market capitalization of the explorer company, which is pre-discovery often valued at 10, 20, $30 million. And after a discovery hole indicating this could be a world-class discovery, we see a sharp rise in value, often leading to a valuation of over $100 million, $200 million, $300 million.
True discovery and invention creates wealth, but that doesn't only occur in the mining sector. We see it in biotech and other sectors. Why did you decide to focus on finding discoveries within the mining sector?
Yeah, it all started for me in the 1990s. I was an investor in Amsterdam real estate. It was all mortgage, so I was quite a bit in depth, and I was studying the economic cycles. I became convinced we're in bubble territory with all them tech stocks, and I decided for myself that when a market crash would start to happen, I would start to take profit on my real estate, because I learned from my studies of monetary cycles that often real estate lags a few years on the stock market. So when the Nasdaq bubble burst, I started to take profit on the real estate. It was 2002, 2003, 2004. And I started to hedge myself by buying gold and silver positions, first physical, and then some mining shares, the bigger names like the Newmans and the Barricks. But I soon learned that the smaller companies doing a discovery were doing much better. So around 2005, I started to specialize on the discovery cycle. I started to study it more and more. I started to even write a small newsletter, the Middelkoop Discovery Alert Service, sending out news about discovery holes. I was very fortunate to be a very early investor in Aurelian Resources. I bought 10,000 stocks for 30 cents 6 weeks before they made the discovery hole at Fruta del Norte. That was beginner's luck. And then I rode it all the way to over $40. Not with all of my shares, but I always had some shares left. And that made a huge impression on me. And then I decided, I like this so much. This is so interesting. Let's really study it in detail. I was working as a journalist at that time, a market commentator for Dutch TV. But I soon decided, to quit as journalist and to focus on discovery and investing full time. And this occurred just before Lehman crashed.
As a speculator, do you feel as if the mining exploration sector and pursuing discoveries there, that you have a higher probability of success versus other comparative sectors that focus on discovery?
I'm also an angel investor in some startups, and in the startup scene, you have the same dynamics. One could say, you see the same in biotech. But I think as an investor, as a speculator, as a fund manager, you should focus on one thing and one thing only. And because it started for me with Aurelian Resources, and I decided to stick to natural resources. Of course, the worst decision in my life was to start a commodity fund in 2008 at the top of the commodity cycle. I should have started a commodity fund now at the bottom of the commodity cycle, but we're very fortunate because we have some 50 million Canadian assets under management. So if you're 50 million at the bottom of the market, nice things can happen to you and your fund when the bull market returns. And I think we're on the verge of that to happen.
How often do you buy your initial position in your fund after that first discovery hole is announced versus when you buy before pre-discovery?
We prefer to buy after a discovery hole and then very soon after. So often when there's a discovery hole, we will be buyers at market at the open. We buy all we can buy when we think it's a great discovery. We did this when the Great Bear discovery was announced, and it was halted, and then we got the news of the private placement, and as soon as it opened, we bought shares in the open market. Buying pre-discovery is always risky, so we only do that when we have a very strong indication a discovery could be made on a short notice. But often often you have to wait longer. We have a big position, now quite sizable position in Sama Resources. They do have a nickel discovery in Ivory Coast, but it's a complex system. They know the nickel is there. They don't know how much nickel is there. And often you have to play the waiting game. And when you've got too much money involved, and you're in the waiting game, it's not the best position for great returns.
Willem, after you see that initial discovery hole press release, can you talk about that first 6 hours? What do you and your team do within that 6 hours after that first hole is released?
Actually, it's about the first 24 or 48 hours. Because if you really talk about a situation that a major discovery hole has been discovered, then you need... Often there's quite limited time before the market opens and you heard the news. Often there's only half an hour or 1.5 hour. So then you do the basic research. You look at the presentation. You look at the insider sales. But most important for me is to look at the graph. When the chart is showing an uptrend already, it often proves to me that there has been a leak, and this is a serious discovery, and the insiders have been buying already. When I see a discovery hole and the chart doesn't show an uptrend, I'm always a little hesitant to buy a lot at the open. But the first 24 hours or 48 hours are most important because there's a lot to study. And I visit the bulletin boards a lot. I visit co.ca. There are always people who know more. There are always people who heard rumors. And there's a lot of advantage to be gained by looking at all these public boards, because this is no insider information. It's all public information. So we have to make sure we're very well regulated. So we have to stay on the safe side and never can trade on insider information. And it takes a lot of time to read all previous press releases, because the discovery hole doesn't come out of nothing. So there has been channel sampling, chip samples, there have been previous drill holes, and you have to study it all, you have to read it all, and most of the time there's quite a bit of history to study. You have to study the location, the geology, you have to look at Google Maps, and well, And this can take 1 or 2 days. But then you have a real advantage, compared to other investors if you've done your homework well.
We'll be right back after this word from our sponsor. Orin Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurinresources.com. That's AURYN resources.com. After you take that initial position in a discovery play, and let's say it's a couple months down the road and drilling progresses, what's the role of fundamental analysis and technical analysis in how you monitor your positions?
Yeah, that's a great question, because it all starts with a bang, and then you get this very steep uptrend. So if this is a world-class discovery in the making, what's very important to notice that the stock will rise and stay above the 50-day moving average. Only once or twice in the discovery phase, the stock will return to the 200-day moving average. And that's most of the time a quite severe correction. So as long as the stock stays above the 50 days moving average, we tend to stay long and long only, and only decide to take profits when we think the parabolic phase of the first stage of this discovery is going to end. Then we tend to sell quite a bit. With Great Bear, we sold half of our position between $7 and $9.50, and then we feel comfortable to ride the correction to the 200-day moving average, and then often the fund starts again.
So you don't always just wait for that exit strategy where the producer buys out the deposit?
Yeah, we always wait for that end game, but not with our full position. And we also, I told you, we're highly regulated. And for example, with Great Bear or Sol Gold, often a position grows to over 10% of our portfolio. And when it's over 10% of our portfolio, we need to scale down. We're not allowed to have one position being over 10% of our portfolio. So then we have to take profits, but we always keep a very large position. Great Bear Resources is still over 5% of our fund, and I expect much higher prices in the future. But we had to scale down because it was over 10% of our fund.
Willem, I talk to CEOs and fund managers who have been guests on this show, and from the CEO perspective, sometimes when they're an exploration company and their shares sell off, they're trying to figure out who's doing the selling, and oftentimes it could be a recent investor that maybe took part in a private placement. I've also talked to fund managers who say that, when they're not happy with what's occurring in the exploration company, they don't mind just blowing out the stock and getting their initial capital back. How do you approach things when you invest in an exploration play and you're not pleased with the progression or management decisions or how they're spending their money? What is your exit strategy at that point?
It's important to sell, and it's often difficult to sell because especially when you have to sell at a loss. But often you better sell at a loss of 30% than wait for the loss to become 90% or even 95%, which happens in exploration stocks. But often for us it's quite difficult because if the stock is quite illiquid, because of our size and the very illiquid markets nowadays, we tend to have a large position which is quite difficult to sell in open market. Often if we start selling aggressively, you'll break down the price. So it can be difficult. So it's always important to understand you made a mistake early, or the situation changed, and react early. Often, I saw the press release or the first news about the terrorist attack in Burkina Faso a few weeks ago, and we had a position in Semafo, and they were down 10, 12%. And I knew I had to sell right away, but I waited. I thought, well, maybe there's an uptick, and then often you tend to sell when it's down 20 or 30%. So often when you see the news, if it's good news on the discovery hole, buy right away. If it's bad news, sell right away.
You launched your fund in 2008, so you've already gone through a bear market. Because you focus on discovery, you can actually still make money in a bear market. But throughout a bear market, if you say to yourself, even though I'm bullish on the long term for commodities and mining, but I realize I'm in a bear market, do you keep more cash rather than positions, or how do you navigate your fund through a bear market?
It's very, very hard, because as a fund manager, you're almost obliged to put your money at work. You can't attract new investors and say, we'll keep it cash for the next few months or a year and wait till the uptrend starts again, because investors, they invest their money and they hope you'll put that money at work. And often we're into a few very good investments which show a real nice uptrend. But if you're in a general bear market, you have 10 discovery stocks going up in your portfolio, but the other 90% is going down. So then it's very difficult to make positive returns in a bear market, especially since the exploration companies don't have any cash flow and have to dilute themselves, and this is in a longer bear market. The dilution is what kills you. It's very hard to make good returns. But we ended, I think, this bear market in commodities. The valuations of commodities against S&P 500 are at 50 years low. And I think this is a once-in-a-lifetime opportunity to really buy at rock bottom prices, really pennies to the dollar.
Because your fund is such a high-risk, high-reward fund, how do you educate your investors in order to temper their expectations?
Yeah, this is maybe the most important part during a bear market. We had net inflows every year since our inception. So we even had net inflows in 2014 and 15 and 16. I think we're the only resource fund who has this track record. And this can only be done by being very open and very very active on the information side. We do a lot of webinars. We send a lot of information out there. So we constantly show investors what we're doing, where the market is. And this has worked very well for us. Of course, there's a lot of frustration in our team, but also with the investors. And every month we have redemptions, but we always have a positive net inflow. It's very rare for us to have a net outflow. And we're very fortunate that we only have retail money, high net worth money, and these investors tend to be much more loyal than the institutional investors. So I know a few funds who work from London or from Toronto, and all their clients was more or less institutional, and they all left. So these funds, they had massive redemptions, and that's what brought the market down that much.
Do you primarily purchase your companies via the Toronto Venture Exchange? Is that the primary exchange that you participate in?
It's the primary exchange. It's not the only exchange. In the first few years, we ignored the Australian companies, but there's some very great situations in Australia, also discoveries. So I think 20% of our portfolio is Australian listed now. Many Australian companies are also listed in London on the London Stock Exchange, and we don't like to trade in London. It's not a very efficient market. You still have to work with market makers, and you get screwed sometimes. But we trade the London Exchange, the Australian Exchange, but mainly the Toronto Stock Exchange, the Venture Index. That's right.
How does the Frankfurt Exchange compare to the TSXV?
We ignore it almost because if they have a listing in Frankfurt, they also have a listing in Toronto. So it's a German situation. It's nice for the German investors. The Germans want to buy in their own country. They have an account for their own stock exchange. But it's very, very rare we trade Frankfurt, although it's very close to Holland. But we prefer to trade it in Canada and have more liquidity.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. Many investors feel that the Toronto Venture Exchange regulators have a louder bark than they do bite. Is there anything that you can share from an international perspective regarding your experience with the Toronto Venture Exchange and maybe some suggestions you might have?
Oh, yeah. If you look at the level of front running and insider trading, this would never be allowed to happen in Europe. Our regulators in Europe would really put people trading on insider information in jail or give them very high fines. So there's a very serious crime if you do that here. And I think the watchdog in Canada, is asleep at the wheel. But mining is such an important part of the economy. So I think there's some pressure from high above that, if people like Willem bring money to Canada, let's not spoil this game. But I think it's a shame what happens. Look at what happened with the pot stocks, and every hype is being developed and helped. In a way, Wall Street could be jealous.
Do you focus at all on that sweet spot, the pre-production spot on the Lassonde life cycle of a mining share right before companies go into production, and that there's that expected increase in share price?
Yeah, that's the second best spot. So we play the discovery phase, and we play the startup of production. Currently, there's an interesting situation. Nevada Copper, they're on the verge of starting production in US, and I think their valuation is incredibly low. So we've been buying that stock, and London Gold starting their Fruta del Norte mine. That's the discovery I described at the start of our talk.
It's your second go round.
Yeah. 13 years later, that's amazing. So we invested there. But it's tricky. We've seen a few new producers really collapse. If we look at the diamond space, we saw a few disasters there. In Australia, we've seen a few disasters with starting producers. Of course, we have Victoria Gold in the Yukon, the first serious gold producer in the Yukon. Seems they're doing everything right, but we need to see a few positive results on a quarterly basis. So it's a risky part, but high risk, high reward, yeah.
And what percentage of your fund would be in that stage of the mining cycle?
10-15%.
Okay, yeah. So you definitely are a discovery fund with.
Yeah, on average, exploration. And we just completed a new strategy, concept for 2020. And we discussed that 50% of our portfolio should always be the top 25 discoveries worldwide. So maximum 25 different names will make out 50% of our portfolio. And then we have ETFs. We play the market also by ETFs. So if we want to go long copper stocks, we prefer to go long the COPX instead of all the different copper names. And the ETF makes let's say 20% of our portfolio, and then we have some other pockets.
Do you have to be bullish from a fundamental and demand standpoint on the underlying commodity before you would invest in a discovery play?
No. The wealth creation from a world-class discovery is so strong that the market, the general market or the underlying metal, could go down by 30 or 40% that year, and that stock will rise 200-300%. And that's what I love about discoveries, a great discovery can be made by a very bad management team. And the management team will be changed when it's a world-class discovery. We've seen that time and again. So there's only one real criteria for us, and that's the quality of the discovery hole. And then the only thing which can go wrong is, and we've seen that happening with Bre-X, that was before our time. But if you really, if the results have been tampered with, and if the gold dust is being salted in the samples, but these of course are very rare situations.
Willem, as we conclude, do you have any parting advice to the investors that are listening to us in light of what we've spoken about today?
Well, people who are just starting to look at this business, they are the fortunate ones. If you can put money at work now and you haven't experienced the losses we all experienced in the last few years, like I said, it's really once in a lifetime situation, and there's so much value out there, and there are so few good projects. We've seen 4 M&A transactions in the gold space in the last few weeks. Today, a new one. And it shows that the producing companies are on the hunt for the last few real good deposits out there. So when a discovery has been made or will be made in the future, you're guaranteed that it will be bought out. And there are some very nice examples on our short list now. We expect a few buyouts. We had 8 buyouts this year, and we expect a few good ones next year.
The best way to follow you, would that be on Twitter if investors want to follow your work?
Yeah, right. I've been very... I had a lot of free publicity in the Netherlands. I worked for Dutch National TV. I'm an author, but I stopped giving a lot of interviews in the mainstream media. So I tend to hide in the office and only do talks like this, which are really on the topics we like to discuss. But I'm very open on Twitter, and I've got 30,000 followers on Twitter, and I'm easy to find there. And I think that's the best way to follow me.
Yep, and Willem's handle is W Middelkoop on Twitter, and his fund's website is cdfund.com. Willem, I really appreciate you coming on Mining Stock Education and sharing your insights. Thank you for joining me today.
Thank you. It was a pleasure.
Thank you for listening to Mining Stock Education. Please subscribe and share this show with like-minded investors. Connect with us at MiningStockEducation.com and sign up for our email list to stay in touch. Much success to you as you learn about, invest in, and profit from mining stocks.
The mining business is one that generates gigantic wealth. A good drill hole that converts might cost $50,000 or $100,000, and it might discover something worth a couple billion.
There is no sector that I know of that has offered up as many predictable circumstances where there was the possibility, certainly not the certainty, but the possibility of 10-for-1 returns, as there is in small cap and micro cap mining stocks. Concomitant with that, if you don't do the work, or even if you do the work and don't discipline yourself on the sell side, there are very few places in the world where you can lose as much money as quickly as in mining stocks too.
I just started to study up on mining stocks, and I just became fascinated because this is such a tiny sector and it's so volatile that either you could do really, really well, or you could pretty much get blown out of the water really quickly.
The mining sector is a very risky sector. It can take your money very, very quickly. Don't fall in love with stocks. Don't be overly confident, and just do your work as best you can. Do your very best, but don't fall in love and don't get too overly confident, because that's a recipe for disaster.
I have met, professional retail investors that have made a tremendous amount of money on the junior mining space. Some of them aren't accredited, and they spend their days researching, talking to people, being on the phone, pouring through financial documents, but it requires commitment.
This